What's up, guys? Welcome back to Roensch Capital Charts. Today we're taking a look at the Nasdaq ETF, the most popular one by most people's standards, ticker QQQ, on a variety of time frames in anticipation of the next trading day, Monday, February 5th. QQQ back on Friday here, finishing the day up 7 points per share, 1.69%, a rather volatile day to the upside here, locking in a brand new all-time high. For those of you who may not be aware, QQQ is not actually a stock. It is the most popular Nasdaq ETF, again, by most people's standards. But it does trade, very similarly, just like a stock. And the volume is so high that I particularly like to look at this one when looking at the Nasdaq, because not only does it provide us with chart movement, but we can also look at actual stock ETF traded volume as well as derivative activity, the options chain, which of course the Qs do have. Many of you are probably trading them as we speak. So let's start here on the Qs on the 1 minute chart from Friday. You can see here, not a lot of incredibly obvious moves. However, I would expect that in this first half of the day, similar to what we saw on SPY, you probably had some scalpers scalping these tests of that 2 standard deviation band off of volume weighted average price. Scalping these to the short side, a little bit sloppy for my taste here. But if you guys would like to get my personal scalp setup alerts, swing trade setup alerts, unusual options activity, or maybe become a platinum one-on-one member, there are a couple of spots left. Take a look at that link in the pinned comment. That's where you will find access to that if you want to go check that out. Let's take a look now at the 5 minute here on the Qs. The reason I want to look here is because I want to look at volume. Now again, we had that fade into the open off of that data that we got. We also get data here on tomorrow, Monday, that I'll lay out in a second. But after the market opened, we just got a grind higher the remainder of the day. And that being the case, really not getting a whole lot of pullback except for this midday pullback. We don't have a lot of volume to compare the upside volume to. The reason I say that is because typically when we're looking at volume compared to the movement of the name, you want to see high volume when the stock, or ETF in this case, is moving in your favor, and low volume. You want to see volume fade off as it moves against you. Since we mostly just got upside here on Friday, not a whole lot to consider other than, of course, low volume heading into the open and big volume off of the opening bell. However, that is, of course, to be expected on any trading day. So that being the case, let's move on here to the 30 minute and get much better context as we head into tomorrow, looking at the very important self-fulfilling prophecy indicators such as the white line, the 50 period moving average, and the gray line, the 200 period moving average. These are 2 technical indicators that we will look at all the time frames we're looking at today, the 30 minute, the 4 hour, and the daily, for one reason only, because they are the most popular. Everybody pays attention to these, so we need to be paying attention to them, because if they're making decisions and programming algorithms to make decisions around those levels, we need to be aware of where those levels sit. So you can see here off the open on the Qs, we respected that 200 period on the 30 minute chart incredibly well, ripped up through the 50 period as we crossed over, tested it, back tested it, claimed it as support, and then ripped higher. That's a really beautiful thing to see if you are a bull. Now, as far as the actual crossover here of the 50 period up over the 200 period, you may see in quite a few chat rooms over this weekend that is called a golden cross. Oh, there's a golden cross on the 30 minute. Listen, for me, I think it's overhyped. The reason I even mention the cross is because the 50 period reacts more quickly than the 200 period because it's a shorter period moving average. It reacts faster. So what that allows it to do to help us bulls with doing is getting up and getting some feet underneath a quick, swift move to the upside. It does the same thing to the downside for bears, by the way, but it gets up there quicker than the 200 period and acts as a quicker safety net, so to speak. So looking specifically at the 30 minute chart here as we head into Monday, you bulls, this is what we're looking at, okay? Upon a back test of that 50 period, the white line, I would really want to see that hold as a support level and bounce up away, ideally up through 430. And that would be an all-time high, but we'll get to that on the daily chart here. Now, if you're a bear, though, one thing is on your mind. get down beneath the 50 period, start making our way back toward that 200 period, at least on the 30-minute chart in particular. Okay, let's move on now to the 4-hour chart. You can see here this 50 period currently sitting right around 424.50. That puts us right now less than 1%, approximately minus 0.85% of a move away from retesting that 50 period on the 4-hour chart. So really, the one and only thing that I'm paying attention to on the 4-hour in particular, aside from that all-time high double top, you know, since we just barely broke the all-time high on Friday, is this 50 period. Because, I mean, granted, the 200 period is down at 412. It's really not immediately relevant. So that 50 period, if you're a bull, if we see a retest of it at all, you're going to want to see that hold and ideally bounce and again put some distance between the price of the ETF and the 50 period here on the 4-hour chart. If you're bearish though, a downside break and hold, even if we saw a retest and then fade, for a bear, that would be a beautiful sight to see. Okay, let's move on now and look at the most important chart of all, which is going to be the daily. And let's zoom in because this is really the most immediately relevant thing that we're looking at. See this double top right around 430? We kind of just got that all-time high on a technicality, hitting about 430 and a quarter. So listen, here on the daily chart, the all-time high, really 430, is a huge level to watch, no matter what side of the ball you're currently playing on, bullish or bearish. Bulls, name of the game here on the daily chart tomorrow. Get up through 430, break the all-time high, get above 430 and a quarter, and hold. Okay, that's the name of the game. If you're a bear, it's even more simple. Just fade as hard as possible off of a retest of 430 or from here. Okay, that's what you're going to want to see, and that would open us up to a potential fall to at least that recent bottom, you know, arguably down to that 50-day moving average, but understand that's down at 405. If you're a bear, you're asking for, you know, a 5.5% pullback in the Nasdaq, which is a relatively big ask when we're talking about something as big as, you know, the Qs. Really, you know, the entire market in this case. Let's zoom out a little bit and take a look at the implied volatility. That's about the right time frame we want. You can see here that implied volatility is sitting in the you could argue mid to lower range when compared to like the last 6 to 8 months approximately. Okay, but more recently, you know, we're kind of in the mid range. More recently, I'm talking like the last like month or so. You can see we're kind of in the mid, you could almost argue a little bit higher range for IV. You know, the lower that goes, the more opportunity that new options buyers could have to experience some potential IV pump, which is of course a good thing. And the higher that goes, the higher the risk for some potential IV crush, which when you're an options seller is great, but when you're an options buyer, that can kind of put a damper on some profits. Let's now look at what the option traders are thinking here. As we head into tomorrow, we can get some really good data as to what the sentiment is by looking at the chain. We have 4.34 million total contracts traded here on Friday. Okay, that's a decent sample size. We can pull some good data out of that. That's a lot of data. 1.93 million calls, 2.4 million puts. So overall call per ratio, interestingly, is actually leaning a bit bearish. Now, short-term speculators, how do we get that? We look at the 0 to 20 delta range, because at 0 to 20 delta, those are going to be on both call and put side, by the way. Further out of the money, typically shorter dated, cheaper, gambly style, short-term speculation style calls and puts. And if we look at the volume, we can gauge the sentiment. So you see here, 560,000 calls, 1.07 million puts. We're seeing just about double the short-term bearish speculation as we are seeing short-term bullish speculation. Understand, though, that the option traders can, of course, you know, they commonly are, but they can, of course, be wrong. The masses can be wrong. This is simply the data, right? There's no opinion here. This is just the data of what the option traders are telling us as we head into tomorrow on the Qs, the Nasdaq. Guys, before you head out, you know, leave me a comment. Let me know what stocks you'd potentially like to see me cover here on the channel in the near future. That feedback is tremendously helpful, even if it is just more, you know, Qs or maybe SPY or whatever it may be. Just let me know. Leave a suggestion. That is tremendously helpful. Appreciate you guys, and I'll see you in the next one.